Hello, swing trading strategy for small accounts, long uptrend line chart analysis. If you have small accounts, and by small account, let's just start with maybe you have $100 that you can save a month. I think you'll be able to open a Roth IRA with a brokerage account. In this instance, I'm going to talk about Charles Schwab. You can open a brokerage account with Charles Schwab and open a Roth IRA with them if you have a job and you are qualified for a Roth IRA. So pretty much there is a certain maximum that you should not exceed at the end of the year when you are investing in Roth IRA. It's a retirement account that after you reach a certain age, you should be able to withdraw from it tax-free. But you'll need to have it for at least 5 years as well. So there is some rules to it, but I'm not going to go too much into the rules because I could be wrong in the sense that I don't pay attention to those rules anymore. But the last time that I'm aware of, whatever the rule was you need to have it at least for 5 years, and you'll be able to take money out of it if it's your principal. Otherwise, you will get penalized if you touch the profit. The profit is tax-free for you after you reach a certain age. So there are some rules to it. You can have a brokerage account to trade in. You will pay tax on a regular taxable brokerage account. The beauty of that is no one tells you when you can take money out of it, as long as you are paying your estimated tax on it on a quarterly basis to your state and to IRS. So if you have a small account, I could suggest, if you have a Roth IRA, to start in a Roth IRA. So let's assume you can save $100. You will save that $100, from your checking account, transfer it to your Roth IRA or your brokerage account, and buy 1 share of a stock. So first, you will try to have your watch list of stocks, and I will suggest you start with a large cap stocks just to train yourself without having to run after the stocks, because the stocks is fluctuating too fast for your speed level of grasping the concept with all the other obligations that you have, including your job and your family, that you have to focus on. So large cap stocks, they don't fluctuate too often, too fast. And with our long option and swing trading strategy, if you are using that, it's good to have upward stocks. So large cap stocks. And we have videos on how you can create a watch list, and you narrow it down to a certain number that you can analyze on a daily basis. So from that list, try to find stocks that cost you less than $100 a share, and buy 1 share at a time. I'm trying to see if I have some stocks here. There are some stocks that cost, in fact, I don't even need to go that far. We can just go to our stocks of the day, and today is October 10, 2025. We have 3 stocks that we are going to analyze together. We can start with the first one, is FI, and we are using maximum daily chart for our long option line swing trading strategy and chart analysis. Maximum daily chart. So when you look at FI, for instance, is 125. So a stock that costs 125, if you have $100 to buy a share, it's now what you will be buying. If you are looking at FI though, I purchased it right there and it still continue to go down. That is the support line. So after we have, the uptrend, the higher lows around there, I purchase it, but it's not done going down. It continued to go down again. Yesterday the market closed on red. The price at the end of the day was lower than the price in the morning, so that's why the price is highlighted in red. But we purchased it somewhere there. I have a Roth IRA that maybe I have about $3,000 in it, and I use a good amount of it to just buy multiple share of it there in there. But then I think I purchased about 2,000 or so for my son as well, and you can see it continue to go down. So that means we have it in our portfolio, but it will be negative at the moment because we pay more for it than it is costing right now. So it's going to be there until it start going back up again. With our strategy, we buy it at the support line when it start making higher lows, a confirmation that it's done going down, and then we buy at the first or second green bar, and after that follow a pullback, and then we will sell after it reach a new high, the peak. But again, even with all that, to make sure we have a confirmation that it stopped going down, it can still turn around and continue going down. So, but yeah, and sometimes I tend to get in the trade a little bit early, and that could be something I will work on as well. But trading the same stocks over and over and over, I can take that risk, saying, well, the stock is not going anywhere. It might go down a little bit, I'll get stuck in it for a while, and then it'll go back up. I'm going to be in the trade for a while anyway, because those large cap, they reach new high frequently. So when it leaves here, it's going to take a while to reach the next new high, and then I'll start thinking about how long after that new high I will stay in the trade before I get out. I will be in it for a while anyway. So with this long option insurance strategy that we are using in 2025, we have the price on the x-axis and the date on the y-axis. So we bought it in September 9 or so, and it has been on the downtrend since. So the next one we can analyze. So this one we have in our portfolio, that's why it's highlighted on our watch list. So FICO again is over $100 as well, but we are going to analyze it as well. So, if you have more than $100 saved, you'll be able to buy FI when it start going up. Right now, FI is not a buy today because again it's making lower lows, it's going down. Let's look at FICO. FICO, we purchased it somewhere there, and then it pulled back because it was we purchased it multiple times in 2024. That's why we have those arrows there. The arrows facing up shows where we bought. The arrows on the top facing down shows where we sold. We purchased it quite a bit in 2024 using short up trend line swing trading strategy, and purchased it around that trend line, and then it was done. So when we purchased it again, it was pretty much done, and we got stuck on it for almost more than a year because this is 2024. So we bought it toward the end of 2024, and you can see it was making lower high ever since until it came below this support line here. We have two. I just feel like this is too low for that to go there, but there is a possibility it could decide to go all the way down there. So when it reach around here, it crossed that support line, making lower lows, and when it start making higher lows, I just purchased some there. So, and it was in August, and yesterday the price went up. It's right at the support line there. The price went up. That's why it's green. The price at the end of the day was higher than the price in the morning. But again, now that we purchase it here, we are going to wait on the next high to exit. We are not going to exit right away when we reach that high, but from there we'll start thinking about when we want it to exit by calculating the price ratio compared to the last time it reached a new high, which is going to be probably somewhere around here. Now, since we are buying it around this support line, is going to be around here. So it came down to where and start going up. Here it didn't really touch base with it. So if we decided that this is the touch point, it didn't take long before it started making new high though. So shortly after it started making new high, and it took, I think I will be more conservative taking this touch base point here. And if I do that, I will say it start making new high somewhere here, and from there it was May 2024, like May. So May until November. So May to November is like 6 months or so that it took. It stayed on that rise before it pulled back. So by considering that, so I'm a little bit hesitant between those two. So either one can be used in my opinion, but I'm going to focus on this one. So by doing that, I'll say 6 months. So when it reached a new high, I can decide to stay in there for 6 months, for 5 months, for 4 months or so before I sell it. Another things I will do as well is, at this point the price is like 1,000, but let's just say 11.15 here, 11.15, and we'll do the high point, and that will be this price here divided by 11.15, 2.1, it double the price. So we can just say 2. So that means the lowest point here is 12.95. So we can just take 12.95 times 2 or times 2.1, that ratio that we just calculated, and that's 25.90. So we can decide that when it reaches 25.90, we will get out of the trade, we will sell it. So, and that is just having those two strategy defined for your exit strategy, for your exit decision making, to help you, guide you there, so that you do not stay too long in the trade and it turn and start going down. That way you can buy and sell on one side of the mountain, the upside of the mountain, get in and get out. But again, this one is 1,700. I will not advise you buy a stock that costs 1,700 when you have a small account. By a small account, I'm talking about, an account that is less than 3,000, because that will you will invest a good chunk of your account in one stock. So you will select your stocks, your watch list, and have the price, although the price is going to change, but you can use the price as a factor to narrow down the one you are going to create your watch list with, to begin with. And I don't have the price in my master list of stocks, because I know that those prices will vary. Do you see that FICO, for instance, at some point it could be in 1,000, and at some point it could be in the 2,000. So that is the reason why I don't really use a price as an indicator here. You can create your watch list, and at that point, at that exact time that you pull those stocks, you can use the price to guide you to narrow down your pool to a short number of watch lists that you like to analyze. But just keep in mind that those prices will vary. At that point that you pull the thing, some stocks could be on the higher side, like toward the peak, therefore have a higher price at that time frame, but does not mean that they don't go lower and could fall within your budget for you to buy one stocks. For instance, a stock could be the 200 when it's around its peak, but when it pull back to the value could be in the 100. You see the ratio we just calculated, that was 2.1, could be in the 100, which will fall right within your budget to spend about, if you have $100 to buy one share of a stock, whether that stock costs you $100 or less. So, and that will be for that one. So FICO, if you have a small account, I don't even advise you to buy FICO. If the account is not a factor, will we be buying FICO today? My answer is still going to be, let me see here. You see this right here is higher. Let's see, this and this are the same, but those two are higher than this one, which is lower than that one later there, but higher than this one. So there is an uptrend there, and yesterday has a green bar. If today is a green bar, it could be a buy. But guess what? You see this long and this one, and then you have this green that is kind of lower than them. You just don't know if it's side is trying to go down a little bit more before. But around this trend line, when we have, let me try to activate this line here, we have an up trend drawing. I will say today could be a buy for FICO if you can afford to purchase one share of a stock at that price. But just keep in mind that it could well try to pull back to this support line before going back up again. So yes, it could be a buy, but I won't necessarily say to go buy it. But yeah, it's pretty much getting ready to start going up. Let's take something into consideration though. Do you see this line here, this support line? If this is just a big mountain that is trying to draw, there is a chance that it will decide to come down here. I purchase it here, I purchase it there, it pull back here, and I purchase it again. If it decided to go all the way down here and start going up from there, I could buy some more. So for me, buying it at this high level, and I still have it in the portfolio, I didn't sell it at a negative, and then I purchase it here. If it pull back here and start going up from there, I could buy some more. I know the stock is not going anywhere. Yes, there is a chance it could bankrupt on me, but I just feel like it's not going to, and that's why it's very important to take your time to pick stocks that you are going to trade, so that you can take that risk investing more in the stocks. If you purchase it, it turn out to be that you purchase it at a higher price, it pull back to a lower price, that if you feel like buying some more, you can buy some more. That way you know that at some point it's going to turn around and start going up. Or you can decide not to buy more and just hold on to that one and see what it's going to do. It's going to take a while to go back up, but it's going to go there. How long it's going to take, we don't know. So you'll get stuck in it for a while, and if it pays dividend, it might pay you some. If it does not, it does not. But it's a learning tool for you. Selling it at a loss to use that remaining money to buy something else is an option as well. It might turn out to be a good decision, just like it might turn out not to be a good one, in the sense that the next one you purchase, if you purchase it at the wrong spot again and it pull back on you, how are you going to sell it at a loss? And then that capital will start decreasing over time if you keep selling it at a loss to pull the residual, the remaining amount, to go invest in another thing. So I just like to keep it like that, like an investment, and just leave it like that and learn my lessons. And have a feel. Sometimes I feel like by buying those stocks, I tend to understand the chart more by just analyzing it if I have not purchased it. Because by purchasing it at those points, I'm putting arrows where I'm buying it, and as the chart is moving, I tend to have a better feel of the support lines that I'm purchasing at in the big picture of the chart, where that support line is standing right now. I don't know if this is a support line for the upside wall of the mountain, or if that's a support line for a valley, if that's the valley of the mountain. So, but considering this could just be a support line for the upside wall of the mountain. If this is the valley, I just feel like this is quite low, but there is a possibility that it will come down there. I just don't know. But those are just stocks that I purchased and that I have those issues with, and I'm learning along the way. So GD is in the 300. So if you have $100 to invest, you are not going to be able to buy these stocks either, unless you keep that $100 in the account and the following month you have another $100 you added to it. In the meantime, if one of stocks on your portfolio is well positioned for you to buy is less than $100 a share, the thing is you are going to buy one share. If you have a small account, buy one share. I think it's even better to say that than to try to put a price tag on it. If you have a small account, chances that you are a new swing trader, buy one share of a stock at a time per trade. And the reason why I would say one share per trade, so that the money you have, you'll be able to use it to buy multiple stocks on your watch list when they are well positioned for you to buy. Because with up to long swing trading strategy, you will, when you make your purchase and you purchase it well at a support line, you are going to be in that trade for a while, accumulating profits. Therefore, that money is going to be invested in that stocks that you purchase for swing trading purposes. Is there, so you won't have access to it until you sell that stock. Therefore, buy one stock one share of stocks per trade, so that you can allocate your money, your small capital, within multiple stocks. Some of them will be a good buy, some of them may not. You will stay longer in the trade, but you will be able to practice your strategy with the list of the stocks that you are trading on your watch list to see which ones react well, are comparable to the strategy you are using, and which ones are not, so that once you sell those, you do not buy them again, but you take them out of your watch list and replace them with others from your master list. Because your watch list, you can have it for 1 year to trade, to test them, those stocks, and then toward the end of the year, turn it over, take some out, put new in, the one that didn't react well with your strategy, and put new in, and then do it again for the next year until you curate your watch list. I don't know how long it's going to take you, how many years, to be a stocks that react well with the strategy you are using, that you will be able to purchase with and sell with based on the strategy you are using. So if you have a small account, buy one share per trade, whether it costs you $12 a share, $50 a share, or $100 a share. If you have a small account, less than 3,000 though, and you like to quantify things, we can take 3,000 times 0.05, 150. So 5%. You can decide that no more than 5% you'll allocate it per trade. You are not doing this to grow the account profit wise. You are doing it to make sure the strategy you are using, you can use it to swing trade those stocks that you are trying to swing trade using that strategy, and you can make profits. Even that's $1 profit after you pay the brokerage fee. Even if that's $1 profit, you have a proof that that stocks work with that strategy. If you are trying to grow the account, maybe buying more share will be the strategy, but you first wanted to know that stocks, you can count on it with the strategy you are using to be able to generate profit for you. And once you have that confirmation, for instance, from that stocks, the next time you are going to buy that stocks, if you make $1 profit buying one share, to make $2 profits, you buy 2 shares. So knowing that stocks, you can make profit on it, the next time you are going to buy it again, you know at what support line you want to buy it next time. You can buy more than 1 share to multiply the profit you made in before, if that makes sense, whatever that profit is. But chances are when you are buying it at a support line to sell it at the peak, the profit is going to be way more than $1 for it. So that is, so if you decided to buy $340, spend that amount on one stock, the decision is you to make. But just to be able to split, depending on how many stocks you have on your watch list, if you have about 80 that you can analyze a day, you can assume that 20 of them, your money will be trapped in those at any given time. So let's just say 100 stocks. We can use the ratio here as well. If you have a list of 80, let's use 20. If at any given moment 20 stocks will be in your portfolio, that's 25. So that, if I'm doing the calculation well, so that will be 25% of your account. So if you were able to save about 3,000, so that will be 780. You'll have allocated to those 20 stocks, and that will be if you are paying about $37 a share or so. This is how we are doing the calculation. So if you are buying stocks and you are allocating $100 per trade, for instance, then if you take that $100 times 20, that will be 2,000 of your account that will be trapped in about 20 stocks at any given time. $1,000 in the account while you keep adding, saving more to every month. So by the calculation that not intuitively you will be doing as you are progressing, you are seeing how much cash you have in the account and stocks you are purchasing. One thing you can do as well is you can see how much you are able to save every month. If that's $100 a month, then you can decide that I will spend no more than $100 per trade. Like not more than $100 a month though, but per trade. Any stocks you purchase, you want to spend less than up to $100 on that stock. You can go that route as well. Because what I noticed is with the long option and swing trading strategy, your money will be in the stocks you purchase. Whether they turn and went down or whether they are growing, accumulating profits, you are going to wait for a while to sell them. So you won't have a lot of liquid cash in liquid asset, or you won't have cash in your account to buy a stock when a stock is well positioned for you to buy, unless you keep saving every month. That's why when you are starting, it's good you just target 1 share per stock to just test that stock. If you are buying it for the first time, to see if that stocks can work with the strategy you are using. You cannot change the stocks. You can only change the strategy. But if you like the strategy, find stocks that can work with it. And once you have that confirmation for the stocks, you can pinpoint it that that stocks is a yes. It's going to remain on your watch list. And the next time you are going to buy it again, if you can afford to buy more share, you do that. So, and that could be a strategy as well. You just have to find which strategy works for you based on your risk tolerance. Some people take more risk than others. I like to be cautious. So when I started trading those last year using short option and swing trading strategy, I targeted no more than 2,000 or 2,500 per trade. 2,000 and I target $25 profit, minimum profit per trade. I was doing short option and swing trading strategy. And I use those strategy to guide me as well, and just keep tweaking it as I went along. With this long strategy though, I noticed that I don't have a lot of cash in the account to keep buying stocks. Therefore, I need to save more to put in the account. And I'm still working on the system that will work well for me, because with this strategy that I'm using this year, my money is in the stocks. Last year, my money was in cash because I kept going in and out of the stocks, buying, selling every few days. But buying and having it for months, the money is in the stocks, is now fluid in the account for me to buy stocks when it's well set. The good news with those large cap stocks, they do not fluctuate often, allowing you to have time to save money, to buy it, to catch it somewhere. But yeah, those are examples that we have here. And I can just put T-Mobile. Let's try T-Mobile here. So T-Mobile is more than $100. Let's try Walmart, for instance. So Walmart is more than $100, but when it's going to be around the support line, it's going to be less than that, but it's around the peak. So you just have to go through your list to see stocks that cost less than $100 if you want to spend, up to $100 per trade, or per trade or per share. To see stocks, you might have a small list to work with, but you can start with those and keep adding more to it. And I recorded a video that we pull stocks from to create the master list, the stocks that we are going to analyze and eliminate some, and we use the price as a factor. Just that will give you a list of stocks that you will be able to go through to select the one that are not too expensive for you to buy. But that is how you are going to start small. If you have a small account, you can set a price not to go over, or you can target for sure one share per trade just to test the stock for the first time. Or you can set dollar amount that you don't want to go over. And I have some numbers here that you can try to take and work with, even decrease the ratio or the dollar amount to see which one will fit your account size, and just go from there. And you mightn't have a lot of money in your account, but just wanted to allocate a small portion to swing trade, which just means you want to start swing trading with a small account. You can see, which one of those options that I just listed that you will want it to, give it a try if you think that's a good idea for you. So thank you so much for your time. We thank you very much for watching our videos, and we thank you very much for all your comments, and we thank you for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and NinaSoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money, just as small. I just wanted to put a stock here, CMG. CMG, you can see how much it's selling per share. So if you have $100 and you buy just one share of CMG to give it a try for the first time, you still have some change left in that within that $100 that you'll be able to buy some other stocks as well later. If they are in that range, you'll be able to buy multiple, even if they are less than that. But again, is we purchase it somewhere there. We purchase it there and store it there. We purchase it there, and then they pull back on us. And we could purchase some more, but I'm waiting on it to have that confirmation that it start going up, because I don't have that confirmation yet. So, but again, you can see how much it's selling per share. With $100, when it's well set and you want to buy it, you can just buy one. And you can see that if you buy it around $40, and the next high is going to be more than $69. So from 40 to 69, you'll have more than $1 profit there. Is how much difference there? More than $20 difference there. So just that small. It's not about getting rich quick. You just want to test those stocks that you are going to swing through for the first time. Just buy one share of them to see if your strategy is working well with them, and then from there, for based on the profit you make from that trade, if that's a good profit and you like to multiply that profit, then you know how many shares you want to buy next based on how much you have in your portfolio. And you might even intentionally save money little by little for that particular stock for the next time it's going to be down. Or once it start going down, you are observing it, you can start saving money for the next purchase that you are going to make. And you might find that you like some stock more than the others based on how they react to the strategy you are using. Thank you so much for your time.